Hello, traders. It is 8:02 a.m. Chicago time on Thursday, the 6th of June, 2019. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on again. One of the things I wanted to make sure that traders knew about is that we're a week away from rollover. The official rollover date for U.S. indices is next Thursday. By this time next Thursday, we'll be quoting September or the U contract. Ooh, hot mic. Let's turn that stuff down. Oh, sorry about that. I'm back at the office, so my mic settings are messed up. That should be a lot better. So, again, next Thursday, we'll be looking at U9 or U19 contract, a September contract. So, rollover and all the extra work that goes with it. It's just part of being in futures. Many advantages, but this is one of those things that is part of the process. So, feedback. No, there's no reason for feedback from my side. Anyway, this morning the allocation is to risk again. The market has popped higher across the board and is coming back into the range in the indices. The leader this morning again is gold, up another $8.10, trading at 1,342 almost. Quite amazing run there in gold. The euro is up 59. It looks like 59 pips. The bonds are up 16 ticks. The yen is up, looks like 28 pips. And the British pound up 28 pips as well, with the 10 years up 3.5 ticks. The euro stocks are unchanged basically on the day. The DAX is a laggard, down 42 points. With the U.S. dollar. Surprisingly, the Bund is also down, despite the fact that it's not surprising. The ECB announced this morning, not much to report there. ECB's Draghi says that forward guidance extension take into account prolongation of uncertainty, must distinguish market-based price expectations. You just figure out what that means. But overall, the ECB did not surprise anyone. It leaves the 7-day main refi rate unchanged at 0% as expected, pushes back forward guidance by another 6 months. So just kicking the can down the road there. There's also a release from the U.S. White House. Trump threatens China with tariffs on further $300 billion in goods. President Trump threatens to hit China with tariffs on at least another $300 billion worth of Chinese goods, but said he thought both China and Mexico wanted to make deals in their trade disputes with the United States. And so that's caused a little bit of volatility overnight, but overall the market's been in rally mode and is coming off a little bit now. As far as what's on the calendar, and it's likely to push us around. By the way, Draghi, as you would expect, is quite dovish. As far as what's on the calendar, we did get the balanced trade for the U.S. about a half hour ago. That came in at negative $50.8 billion versus $50.7 billion, so just $100 million worse. We get the Canadian IVPMI expecting 56.7 at 10 a.m. Eastern. Fed's Williams speaks at 1 p.m. Eastern. And Fed's Daily speaks at midnight Eastern this evening. Nothing really extensive on the calendar. It's likely to disrupt our auction. Let's take a look at what was expected yesterday. Again, today's broadcast, by the way, is in full 1080p. I'm back in my seat here in Chicago, and the bandwidth is pretty sweet here from the office on fiber, so no issues there. So the image in front of you looks fuzzy because it's a lower resolution. But overall, the primary scenario is what played out. The expectation was for a pullback towards the prior day's range. Was looking for 28.05 as a key test area for a pop into 28 to 28 and potentially 33.50. With 24 being a stumbling block. Here's the 24. The 24 comes from right here. It's the top of the singles from the selling day last Tuesday. I talked about that yesterday, expecting it to get tangled in here a little bit. And at the point of control at 28.28, and then the target was expected to be around 28.33.50. Here's what actually happened. So we have the market reverting back. We have an open auction and the market pushing back towards 28.0875 before it popped higher. Couldn't hold those prices. Came back down and it pushed to 28.01. Remember, 28.05 was expected to be the test area, pushed through by a few. And then from there, expected a rotation up. The first test of mid was good for about 3 points before it failed. And then once we pushed through, we had a test of mid here, and we continued higher to break the IB high. Another neutral day up. We tangled exactly where we were expecting to at 28.23.50. We got tangled up there. You can see there's a high volume node right there. And then we finished at 28.2875. The target of 28.33.50. The next, there were three prices that I mentioned. The 28.23.50, 28.28, and 28.33.50 from yesterday. It got 2 out of 3. That's in addition to the reversion back and push through to 28.05 and getting to 28.01. So overall, a relatively orderly auction, albeit based on the action, was quite choppy. I was not here yesterday. I was traveling, so I did not participate, so I can't comment on how it traded. We finished the day, if we look closely here, we finished the day with a very blunt top, with quite a blunt top here, a very poor high, and overall we didn't shift the point of control up. The profile very boxy. Look at that. There's no real bulge there at the point of control, giving us an idea that price was found to be fair here, and there was a consensus. Overall, though, the profile is quite boxy. The value area is valid here, but I'm going to say that the market really cannot find consensus. We're still having a very strong discord between the buyers and the sellers in this situation. And so when that happens, we have exploration of price throughout the range, and that's what it looks like. It looks very boxy. We finished up with a high volume node near the high. The market did not come off of that high very easily. So what do we expect? This is the same question I asked yesterday following the close of Tuesday. What do we get once we see this? We get basically a very, very high probability of a continuation higher to continue the auction up. That carries us into the overnight session. The overnight session reopened, pushed through that high a little bit before it closed again. The market opens for a half hour between 4:30 and 5 Eastern, and then it reopens again. But by the time it had reopened, the news had hit, and we had a gap down. The market resumes its auction. Notice it just came right back to the open of the new session, or actually it wasn't even a new session yet. Technically, it comes back to where it finished. It retests towards the mid here and then continues higher and hold steady at the high out of range. We just tested yesterday's high in the ES multiple times and are holding steady. So this is, if had we not had, but for the news coming in when it did, the expectation is this leg here would have been much slower because of the Asian session. But essentially, if you take this portion here and transpose it on here, this is what would have been expected on the reopen, just a continuation higher and then chop through the Asian session before the Europeans come in and drive it one way or the other. So that's where we are. We're in a pullback. The shape of the profile is an odd P shape, really. It's a kind of a B with a tail on it. Basically giving us an indication that these notice the taper at the low here. Very, very nice taper. This is what an unfair low looks like, or an excess low looks like. This is when we see that the market is rejecting those prices. The opposite of that is what we saw yesterday and what we have today, where there's volume right up to the high. That's not an excess. It's telling us that we haven't really found an unfair price to start our true rotation down to test for buyers at that point, because we've exhausted, we've brought prices in, exhausted buyers, and enticed sellers to step in. And an excess basically shows that buyers became aggressive and sellers were exhausted, and buyers came in and took price up real quick. So it's important. It's not what prices. This is why we look at volume profile. This is volume profile for me since 2005 has been a big deal. It's because we get to see what's inside the bar, and it's not limited by time. It's basically showing us how much of price the participants wanted at any given time, and the market has memory in it. In case you haven't noticed, we do test and retest certain prices again and again and again. And so seeing inside means you're looking at where the interest is, and the interest is near highs. The expectation is for the overnight high to be pushed today if we don't just revert back to 28.14 this morning. So that's how things are shaping up. The overnight volume is fairly strong. One of the things I wanted to kind of go over is what we've done in the bigger picture. Let's extend this profile. Is what we've done in the bigger picture. We've pulled back, so we've pushed to the all-time high at 29.56. We've pulled that back to the MC point of control. I've been talking about this for several days now at 27.37, and we have bounced quite strong from there. We have not left any gaps behind on this bounce, and yesterday we took out the 38%. The 50% of this bounce is 28.42. Remember that number, 28.42, and then there's a gap that was left behind from here. And the mid of that gap is 28.42.50. There's a fair amount of confluence in that region. The mid of the sell-off, the gap zone mid, and so on. So we'll see if there's a reaction there if the market starts to turn up after the close. But this is relatively, a relatively muted pullback or well-structured pullback from the last low. We really haven't lost, the buyers have not lost much ground just yet. In case you're really tuned into the bears, I'm not seeing it just from a factual basis as much as I can. I'm not seeing a good case of, hey, to sell the bounces because it's done to the upside. We may still get a rotation down to 26.50 or so, but for now I would be quite cautious because we did test the MC point of control and bounce pretty good from there. So that's the review portion. Let's take a look at what we're expecting for aujourd'hui, for today. Overall, We've bounced up and have pulled back just like we talked about. 1 second. And this morning we're opening on the edge of yesterday's high. The expectation is we're likely to push into yesterday's range. I'm looking for it to drop into this 23 area again, bounce around, and then push out. And I'm looking for a break of the overnight high and a push into this 2848 area before the drop. So we've taken out the 2833. We'll probably test it during the day session. But overall, I'm expecting higher lows, higher highs with a higher point of control. I'm expecting this push to continue, although it's likely to slow down a little bit, at least statistically, in terms of how far it can reach. The secondary scenario is it opens, tests that overnight point of control, tests the overnight high, and then comes right back in with vigor through an impulse, and then starts walking itself back to yesterday's point of control, 2314 or so, and then breaking to value low before taking a bounce. Value low is around 2809 or so. Before taking a bounce. And in this case, I expect it to finish inside of the prior range. We still end up with a higher high, higher low. Point of control shifting slightly higher, but probably inside of the prior day's value area, giving us balance, which wouldn't be too much of a surprise today after the rally from 2 days ago. The market's come a long way. And it wouldn't surprise me if we took a break. This is assuming no new input, in other words, news and so on. Okay, this is how things look like. Hopefully you're gaining something every day. Don't forget, next Thursday is rollover for U.S. indices. We'll start trading the September contract, and of course for a week until expiration the following Friday, which will be Friday the 14th. Actually, no, it's not. Friday the 21st. We'll have to take the delta, the volume, with a grain of salt. Tomorrow morning is non-farm payrolls and unemployment. Tomorrow morning is very important, given that ADP came in really, really poor, and so don't step in too strong into tomorrow's action. I expect a little bit of volatility. I expect some sort of a miss, but tomorrow is really important, okay? So at the end of the day today, you might see some squaring up. Do not fade the move into the close. The last 10 minutes of the cash session, not a good idea to fade that move, whatever that is. Good luck.